Greetings, market rebels. Welcome to this week's macro measure. It's Sunday, April 23rd, 2023. It's a little in front of 1020, I think. And let's flash a couple quick things here, like our trustee disclaimer. If you could please take a good look at that. And then we've got our trustee intellectual property rights notice. And you could take a quick look at that. We'd appreciate it. And then we're going to go into this week's plan program, and I'm really going to try to cover these as I show charts, this, that, or the other thing. So let's try to go through those when we've got all that stuff up and running. And for now, I'm just going to flash the second part of the stream, just kind of summarizing, I think, the bottom line major situation that we've got there. So I'll leave it up there just in case anyone wants to snapshot it or just pause or whatever and grab it just to kind of go through things. But this is for this week. That's the second one. And then last week, here's a refresher of what we had last week. I'll leave that up just for a few seconds. And then we also had this from last week because things have gotten so darn complicated. And then this is from the week, a few weeks back. So if you're trying to keep track of where things have been, where they've come from, it's just so hard right now to pare things down. There's so much I think happening out there, but it's sort of easy this week from a technical sense. Let's just reposition everything here. So just stop sharing briefly, and then I'm going to get us repositioned here. So where are we? So let me get set up here with this, move this off screen so we can go through things, and then we'll get back up and running here on this screen right here. And then this should do it. So let me just get the share going again. And the share should be number 4, share 4. Okay, so I think we've got this up. These are my browser tabs. So this is what I wanted to cover here. We've used some of these before. We're not going through all of them, but basically, right, we've got I think if memory serves, we've got Microsoft reporting, we've got Google reporting, I think we have Amazon reporting, Meta is reporting, and Visa and Exxon are reporting. So I would say half of the top 10 in terms of weights are reporting this week. And so that's why I would say that the bottom line is, we just have to remain really nimble, because what they throw at us, what comes out of these reactions, of course, I just don't know. I don't know how the actual performance will be, and I don't know how that spin will be put out there into the market sphere, and then how the gang treats that. So I think we're still tied up. There's not much we can do about that. I would say, as my notes made clear at the very first line, April's been awful. And I think it's just straight up been awful. And we came into last week with this idea that it was sort of a mixed bag. We were doing that again. And, I think it remains that way. And we talked about it a little bit on Cocktail Hour. It's not that we've really gone very, very much nowhere, right? You're barely changed on the entire month in some ways. Just the way we've done it has been a lot of ideas that were good ones inside of this kind of frustrating consolidation. A lot of them, the gaps really made it hard for people to get in. Once the gap, has happened, there were some that delivered a little more movement, but then you'd get a quick pullback too. So it's been, I think, very hard to trade. I'm kind of surprised at how rough it's been, because I think Q1 was really good. It was it was not easy, but it was a great trading market in both directions. And this Q2 is starting out, I think, pretty cruddy, to go back to the old bad news bears days. But this spot over here, right, late in the year, early into this year, last year, I should say, early into this year, and this was sort of similar. There's a little bit of similarities, but there was some, I think, better, just overall, it was not easy, but there was better movement from top to bottom. And this has just been a really kind of creeping malaise type thing, and getting really tired of it. I can't wait for us to get past the next thing, which is, the FOMC and then Apple the following week. So just remember that Apple and FOMC come out the following week. So that could be really hopefully the end of the kind of torture we've been stuck in this market. I think that we just shouldn't get ahead of ourselves. And I think we could say, well, wait, is this sort of a triple top? And it could be, right? I was thinking kind of more of a double top potentially last week, but if you say, well, you got pretty close to here, it's going to give it a little leeway, got pretty close to this prior peak that's not that far away. I guess you could say that. Some people are going to say, well, it's kind of a head and shoulders, isn't it? And again, I'm really more about it's in the eye of the beholder, and I think you could make that argument, but I don't want to get too far ahead, and I don't think you can rule out things. And this is why it's even frustrating. I'll go through just a few things to note technically how I see things, that you can make the case that it's good and bad, right? You can make the case that, well, look, you've taken out the bear market downtrend line in that kind of hot pink color I'm mousing over, and you have put in a higher, albeit not all that impressive in terms of how much higher, but you've put in a higher low. This could end up being a higher low in here, and then you break through finally, and that's true. It could work out that way. It really could, but it hasn't, right? And we're still waiting, and we might have to wait another 10, 12 days to really start getting somewhere. I think overall the sectors didn't even help, right? People were wondering about sectors at some point. I think in cocktail hour we brought it up, and let me see if I can get that. I'm not sure if it's this one. No, it is not that one. So it's my other sector. It's this one here that should show up. But here's just a quick flash of the sectors, which I'll talk about in sector situation. But that video, again, will be pretty short because most of these things sputtered, right? So I would say overall last week, to kind of zoom in on that, right? Last week, just what can you say? We said watch the prior Tuesday's high, I think. So here's the start of the week. We said watch Tuesday's high, and we said I think we said watch Friday's high and Tuesday's low. So there's Friday's high. They did get it a little past there, but that was a false breakout. Tuesday's low never even came into the mix. And at the end of the day, as people like to say, these closing maneuvers they pulled off held that rising 10 SMA that's white there. So they haven't even cracked that, right? So you could say, well, that's really good, right? If you have this really strong run from here and you get above the bear market downtrend line and you keep holding in there and you're not giving that much of your gains back, that's a sign of strength. And look, the reluctance to close below the 10 SMA is just another factor. So we could say that. We could also say that it's pretty bad that this thing hasn't been able to do more yet, right? It has not been able to break out, and hasn't even challenged really the highest high of this former consolidation up in here. The highest high there is for 1831, and the closest that we got to this point was 415.72, so about 3 points away, and it hasn't been able to take that out. But maybe there's more in store, right? We'll see. It's just very hard right now. I think cyclically, I think overall, when I look at the things I do, I think the bears took a little bit more control. There was a little more damage done by the end of the week, but there's always, lately there's always been a little something to say, well, hold on, maybe it's not so bad after all, or maybe it's not as good as it looks, right? It just depends on how things have ended up, but it's really not that great. I think we could kind of end the technical discussion by saying, well, this, that, and the other thing, here's what I think, this is high probability, this. And really, right, when all those earnings start to hit the tape and the comments that come out from those CEOs and the way that the gang takes those catalysts and works with them, that's really going to probably, right, we can't say for sure, but probably that all has the final say over all these technicals. And I think this is why every earnings season, a lot of people like it. I don't like earnings season. I don't like that kind of near to the Fed time, because I think it really introduces uh, more randomness, or you could say it becomes less predictable in my eyes. And so I want things to kind of trade as they normally do. So I don't really care for those times. And leading up to earnings here, it hasn't been good. Good action. It just hasn't been good action. I'm thinking right 10 days from now, roughly speaking, we'll move beyond a lot of these things, and then we'll see what happens here. But that's why I'm not going to go into these technicals all that much. Let's talk about last week. Yep. So let's mention this. They did kind of hold on to that 411 for 412, which is another important level. That's the thing. There's so many levels, with 408, 409 also being big if we were to go way back, which I'm not going to waste time on. But there's a lot of support here. The 20 days rising there in light blue on the SPY, and you've got even your longer terms are really all positively sloped for the most part. I'm not positive on the 50 right there, but it looks like it's close to it. It probably depends on your look back a little bit. It's flat to positively sloping. So they're not all rolling over, we can say that. And they've really taken, even though you're a little bit overbought by some measures, still you're still not in any crazy overbought level, because you've backed off really since Tuesday's high. So it's set up. If they can pretty much do whatever they want with it, with a 59 RSI reading, you can come off more and not get crazy oversold easily, and you can rally and probably not get overbought too easily. So this is just an undesirable time, is the way I see it. They managed to bridge their way, I think, by saving the market, which I mentioned in the notes, that by holding on and not letting this crack, they were on the precipice there, I think, late Thursday. And lo and behold, it was the same old routine where the save happens. The save happens on Friday, and they reverse things and get them back above the 10-day. And I think that bought them time to now they can work with these mega cap earnings that are coming out this week. And so there's not a lot to really read from, right? If the technicals are not all that strong in terms of a lean, if the sector's kind of sputtered and didn't do very much, if we got another kind of false breakout where we have before, and a reversal from there, but not too much of a reversal, all these things kind of add up to it's a tough call. And so we've had the tough call really for 3 weeks in a row, and our tough call, which is a frustrating place to arrive at, that actually was the right answer, because it hasn't been easy, right? In other words, our tough call, because we just didn't have a strong lean, that made it probably possible for us to have more of just take the singles and doubles that we've been kind of preaching when they're there, and don't get too greedy and overstay your welcome, because it just hasn't been a market where you've been rewarded for overstaying your welcome. Sometimes when you're in that strongly trending bull, but occasionally bear, you can get that great returns on short-term trades by staying in there longer, but it's been very hard to do that. So we did note last week there was a little bit of a bullish curl happening in the shorties, and so there was more of a little rally attempt off of that, but it was only a 1% or less push, as we noted. So nothing special there. And again, I would just note that from the notes that I've got this week, when you get beats, when they have earnings and they call it a beat, right? I would say that's far more likely to be spun that way than not. I would say it's probably like 2/3 to 1/3, where they try to, maybe even higher than that, really, that they're always going to try to spin something as a beat. So this tough one, the recap really is, that's tough. We had some comments about this week, some comments about last week kind of mixed in there. But for now, I would say that this kind of looks like a little bit of a rollover, but it's rolling over into stout support at 411, 412, also 408, 409, and rising short-term SMAs. So the 20s right there. So when the 20 gets up towards 408, that'll be a bigger deal, where you've got the 20, you've got 408. It's been touched and it's reacted. The price has reacted to it many times. So you just have to it would probably take some really bad news to crack through there. But yeah, it could happen. Just saying I would, if they do have a little bit more of a pullback, I would definitely wait to see if it held the 20 before I really got super bearish. If it can't hold there, then I think now there's a lot more wrong, maybe, or they're realizing there's a lot more wrong. So we talked about the mega cap earnings deluge we're having. The short positioning is still very high. I still think you're going to have a very challenging week again this week. And I think that, the reactions and how they spin that and other news is going to trump the chart work. We still can't force an opinion here. I think you just take what you can get for now and then wait, just tread water essentially. And I think I've been seeing returns out of people that are responding in webinars and in Rebel Pit, and they're still eking out some pretty solid returns. And I've got to say, I think they're doing a great job because it just hasn't been easy to do that in this market. So kudos to everyone that's still mining away every day and grinding out profits during a really tough phase. And if you can do that, then during a phase like this, when we get to the better times, which we probably will not too far in the future, IMO, I think you'll do much better. We could still have to be on guard for false and legit breakouts if they try to work with these earnings this week to put that breakout together or breakdown. You always have that reminder. Again, mild pullback. And so if you look at this little area that we're dealing with in here, they've got, still have higher highs and higher lows to this point. So we have to respect this sort of shorter term trend for now, but it is curling a little bit. If we go back to our little, where is that right there? We go back to here. What I would note is that if you look at this, this is a 90% chance at this point. So that's what the expectation is. That means it probably happens. I guess it really isn't much of a surprise. Could a lot change between now and midweek next week? Yes, it could. We just don't know for sure. But as of right now, that's a pretty stout likelihood that you're going up a little bit more. So just be prepared for that. But they could try to treat that as something celebratory. It depends on the wording, maybe, and say, well, look, it looks like this is the last of them. We finally reached that wonderful point. But again, that's what we've seen many times in the past, that when they finally do reach here and it's likely that the next move is down, they start cutting. When they start cutting, that's the acknowledgement that things are rough in the economy, things are slowing down, which again, I still think they appear to be to me in important ways. And that's when the market has historically gotten beaten up pretty badly as a result of all that. So we're not super greedy right now, just to note there. So it's clearly right in greed territory, but we've seen much higher readings. So again, this can keep going. And as far as AAII, this is now the 9th week that pessimism has been above average, according to the way they're reading their own stuff, right? So that just keeps adding fuel. This is why I think it's so hard to get this market to go down. One of the reasons why. So let's do the quick refresher on where we are. We're in year 3, as we almost do this every week at this point, but because it's been working to this point, except April hasn't delivered. Remember, March struggled for a while too, and then March eventually finished strongly. And here we have the last week of April coming up, last trading week of April. So maybe they'll try to save April with a final burst. Who knows? But do note that this is the best year. It's nearly double the second best year, which is next year in terms of the presidential cycle, right? The election cycle. And when it comes to the so-called sweet spot, we're supposedly in it, right? Because if you look, this goes a little bit towards, I would say, about the halfway point of the year in the pre-election year. And you can see this is where it's green, like they're calling it the sweet spot. And usually, right, they find a way to rally. And I guess if there's July earnings reports are also something they can work with, they could try to extend that. And then maybe, right, you kind of see that late summer sort of doldrums that we get into September. And then in September, things kind of meander for a while. But pre-election year is not all that great for the tacking on gains from that point. It seems like you kind of work your way back, and then maybe you get the late in the year markup overall, but you might have to endure a lot of back and forth. But I would take this back and forth over what we've been treated to. lately because the last 3 weeks have just been awful. Do note as well, this is the other reminder, right, that we did bottom in October, and as much as I'm still not a big believer that it's all over. It could be, and that would be right in line with historical precedents. It's right there. So you can see when we typically see bear markets end, it's October by far, and then March is the next runner up. So there's that as well. So we don't really have to go into much else there. What I did want to note, though, is using Market Rebellion's own charting from the Elite service, UOA Elite, and I spend my time in there all day long. But if you look at this, we noted this when it got up there pretty good, but not really extreme like it had been before. And so again, I think you could interpret this to say, well, that couldn't really register something super strong. And if you look at MMFI, you could say, and neither could this one, right? The percentage of stocks above their 50-day moving average. Neither could the 200, right? None of these really put it together. So this is another kind of argument for, well, that's not that impressive. If this was really we're about to break out, wouldn't there be more and more good stuff happening like this? And the answer would be, sure, there should be. We saw this. What happened? Why isn't this doing it? Where did that momentum go? So you could argue it that way. You could also say that this is due to the pessimism, and then this thing's eventually going to come along for the ride, which could be the case. But if you look at it now, I sort of look at it as they weren't able to do very much, and the markets are rolling over. As we saw on the SPY chart, you're rolling over a little bit, but they held the 10 in check, right? And they really have held the overwhelming majority of these gains. They've held, they probably have held 85% of the gains from this low to this high that was made on Tuesday. So you really can't, I don't know what percentile it's in exactly, but you can see that that's held pretty well. So how do you really say much bad stuff at this point about all this, right? It's tough to really say, well, this is get definitive on it is what I'm getting at. So I don't want to belabor that, but that was just a quick tab views I wanted to share on this. And I think so that covers us with market breadth. It got a little bit weaker, but we're wondering, right? Normally you want to see a little correction that way, but I don't know if that is really helpful. It's kind of, to me, I'm kind of leaning, maybe it's just my overall take, influencing my view of it, but it still doesn't seem that impressive to me. But then again, I can't rule out the catch-up phase later on. I do want to note that and I'm looking at the wrong screen here. So I do want to note that I believe that this is kind of like the next phase of the market, whenever that unfolds. I think that there's been a massive, massive amount of money put to work already. I think a lot of players have put, not even like a really strong amount. I'm talking really, really, really strong amount in my eyes of money has gotten plowed back into this market. So I think there's a lot of front running bulls that think that they're going to, outsmart the Fed. They're going to get in early. The Fed's going to we will cut rates sooner than later after this final increase, the way some see it. And then after that, the Fed will start coming down, and then the market will belie the historical trend and precedent of selling off, as it has many times after cuts begin, and we'll just keep going because we'll be back to the easy money days. Maybe they're right. I have a hard time believing that. Maybe they're right, but what I'm noting is that I think whatever phase we get next, whether it's another strong bullish phase that's maybe just a lot of squeezing, or initially a lot of squeezing, or more, of course, or the big reversal comes and it's obvious that they're trapped. I think you're set up for, if bulls are trapped, there's going to be a really strong selling that comes out of this kind of October to wherever it starts, I guess you could say, phase. And if it looks like they've really front ran the Fed properly, and that rates start really rolling back over strongly, and then the market defies historical precedent and just keeps going, I think a lot of people are like me, who would have such a hard time believing that that's legitimate at this point. that they haven't committed as well. So I think there's a lot of folks that doubt this, and they could be ones that really have to plow in because they'd be in a big way quickly, because they'd be risking underperformance even more so than they already have. So I don't agree with that bullish take, of course, but that doesn't really matter, right? We try to just go with what we think is the most likely scenarios and then adjust from there. That's really just what we do. So I still think you're looking, that's where I think you ultimately are. When that happens, I don't know. Maybe it is after this FOMC meeting. I don't know. There's so many things in play right now. I do think signals of doubles are still, with the occasional double, I should say, is what we're going for. I think the bottom line scenario this week is you've got to stay nimble and you got to trade around the calendar. I do think the bulls ceded control, as I mentioned earlier, but as I noted, they bridge their way to these calendar catalysts. So they've got the Fed and they've got the beyond the Fed, they've got Apple the following week as well, which they like to hang their hats on. Those two things. I did talk about that. So I talked about really the final this week's stream too, for the most part. So the other thing I would say is that the kind of final two lines from this week's stream are that I think this battle is really interesting because I've seen a lot of stock market performance metrics that have really good historical track records suggest that there's a low probability that we're still in a bear market. And in other words, that there's a good probability or better that we're in a new bull. That's a lot of things have been put out there by market technicians and other types of analysts talking about that on Twitter that we've come across. And it's hard to argue, right, if they define the conditions or the criteria and those criteria are in place, and then you look back and say, well, when has this criteria been in place before and the track record's good, you've got to concede that, right, even if you're a non-believer. But at the same time, there's a lot of economic signs and signs in other markets like the treasury markets, right, where the inversion, you've got the yield curve inversion that everyone discusses. It's probably over discussed, but it's had a really good track record overall. And other signs, different manufacturing survey, it goes on and on and on. Those types of signs say there's a high probability that we're going to see a recession later this year, an official recession. And that doesn't appear to be priced in right now, given where they've moved things back up to. So that's why I think it's super interesting right now, but it makes it challenging for us because taking a lean during times like this is pretty tough. So this is our big picture view. I know it's really messy, but this is the big picture view. And I just want to note this, that this is my area where I think if they do put a squeeze together, maybe one final squeeze round, I think they're going to try to take it through there. And that could ignite even more buying. And that could get you, I still think that could get you up towards that 440-ish on SPY. And so I can't rule that out. And I think that'll really draw in a lot of folks and that'll just capitulate at that point. And of course, that's what these guys love to bring about. Let's take a look at the Qs and the rest of our normal symbol carousel here. We go around. I don't need a big picture view like this, but it's similar right there, just because we happen to land there that way. It is a similar view, but here's the Qs a little bit more up close, and it's very similar to what we saw. It really is very similar to what we saw. They're holding the 20 instead of the 10. And they've got higher highs and higher lows. Could you say, well, hey, wait a second, there's a similar high or slightly lower high here with worse RSI readings and go with that divergence? You could, but you could also say that the long-term moving SMAs those are all upsloping. They held the 20, and I could keep talking about this, that, and the other thing, but what really matters is how they're going to spin these earnings reports. That's really all that matters, and until we get to the Fed or other news that can't anticipate, or other economic news that's out there. So I would say, look, the bulls are probably still in control because they were able to hold on to the 10 in the SPY and the 20 in the Qs. So if the lows they made on say Friday are taken out, then that's when the threat really comes back, right? That maybe they crack and they, like I said, they trade down towards their 50s. But until you see that Friday low crack, I don't think you really are in a market that you can force a trade on. You could force a breakout trade, of course, and you're going to go back up towards those recent highs in here, which are near 321 and change. No doubt about it. You could definitely see that. I won't rule that out, but it's still not a big runaway train of a trade. Diamonds, let's take a look at those as well. So diamonds are in a similar situation, right? They've pulled back. Interestingly, I think what they did is sort of pulled back close to this area here. So there's a little bit, I think, of a flat line there. They got just above there on the 15 in red, but they're kind of holding above that resistance line that we have drawn in there. They've been able to do that to this point. So again, I would say that they lost their momentum but they've been hanging out and just kind of consolidating, and it's really the similar story. If we were not in the situation we are, I would wait for this to get and say, look, if it breaks through there, you always have that false breakout risk, but you break through there and keep going, then you've got to say, oh, this is maybe a whole nother leg after this consolidation phase that you've been in. This could be the extension of this initial part of a leg higher. You could have several legs up from here, and you still could. It's just that I have a hard time with that at this point, knowing what I know, thinking what I think, and just having been through these macro games that they play with some of these bigger charts. IWM still looking the worst of them all. We've talked about this for a while now. I don't know how you can say, no, that looks the best. It certainly doesn't look the best to me. It's below most of the longer term SMAs. It does seem to have gotten some help from the 20 SMA there in light blue on Friday. But it's been struggling, right? It's just not moved up anywhere near as much as the other three have. So it's got more work cut out for it, I think, to do that. Interestingly, as we noted last week, if it takes out our resistance line and the 100, 200 area, then it probably would open up a lot more space for itself. So interestingly, you've got the lowest low here, then you have a higher low cluster right there. Maybe you've got another higher low put in here, and they're just kind of working their way up. And some would say, well, isn't that sort of a triangle? And you probably could make the argument, right, that it is. If we just drop this, we'll just drop this across there like that. It's good enough for quick and dirty. And then we'll do here like this, and you get the idea. So that's kind of coming. And interestingly, like we're saying, yeah, there should be something happening in a big way in the near future, not too far away. We're coming towards the apex of the triangle. So we are probably getting within a couple of weeks, I would think, of something bigger. Interestingly, like the cycles stuff that I do, the cycle stuff just do not like the IWM nearly as much as well. So the cycles just aren't as good looking in there. The Qs, on the other hand, they probably have some of the best cycles, but their bigger picture timeframes are looking still solid, but the daily did get a little vulnerable. So it kind of makes sense right after that Tuesday to Friday selling we saw. So I think you got to be careful here. There's a gap right there that we don't have noted, but you get the idea, right? You probably could trade down again. I think you could trade down towards the 50 if these earnings aren't received well somehow, and a little bit of reality starts to creep back in. So I'll take a look at some other things. I do think it's just a little difficult to really get a lot of enthusiasm going when you're where we are in the grand scheme, because we know we're going to be held hostage by these earnings reaction shenanigans, right? Where they gap things one way or another, and then by the end of the day, they've completely erased. It's utterly ridiculous, but it's, for people that specialize in that, that think they've got some edge in that. It can be obviously can be really good if you get those big moves. But I think crude we're taking a look at crude here. Crude took a turn for the worse. So you get the higher high here that kind of clears out things, and that could be something you're thinking, okay, there could be something if it kind of holds the lows and then starts coming back up and through. Well, it didn't. It didn't hold those lows that were made a few weeks back. It just went right through them. And the 50 is the last of them there in gold. So that could crack the 50. That could possibly fill this gap. So I think you have to be concerned about that. That really is some, and again, it's just been tough trading in there. I've been noting this for months and months and months that every time I put some UOA ideas in that are in that space, it has been a hard trade. There's definitely been opportunities. I think people have done pretty well overall, but it's just not been that runaway strong trending action that we see sometimes in energy. We just haven't seen it. So that's on the ropes right there. I think if you're a bull, you really don't want to see it do much more than fill this gap. If it goes even lower, right, that really means this was a really nice false breakout that they put together, which again, that's why I always warn about them. But I'm trying to look at this from the macro picture, and I just want to show everyone that, that's not really a great sign that things are really rolling strongly, right, in the global economy. Lumber as well, right? Look at this was another one that was flashing when we looked at it, that hey, maybe you could try to do something. It got started on Monday trying to do something, and then it got held below the 100 SMA in white. That was the last one we have on the chart for now. And then they just sent it packing, and it's right back to a support, pretty much right back near a support level. It's on the 20, but that just doesn't look good at the moment. What you'd have to hope for here is this becomes a higher low versus here, and then it starts to take this high out and challenges this high. But as of right now, I mean, I don't. If I were long, I would have hedged going out Friday. I don't like the way this looks right now at all. I think it looks pretty sketchy. But if things were rip roaring, right, the way that some people continue to spin that they are, you probably would see a better looking chart in lumber, a better looking chart in crude oil, and you'd see maybe a better looking chart in copper. Now, copper was another thing that was another item that was it may try to do something. When we looked at it last week, the way that it kind of finished the prior week, and it peaked out there on the prior week, pulled back a little bit, and then just kept going, right? And so it's threatening to lose the 100, which it did temporarily, at least the 100 SMA, and that really opens it up to lower levels, right? That it could sink down and down and down. So that doesn't look very good. You can see this high here versus the prior high, and there's a little bit of RSI divergence there, I think, right? In terms of its, nope, actually I'm wrong. The way that it looked on when it was scaled down, it looked a little different to me. So I thought there could be a little bit of negative divergence there, but it turned out that it really isn't. But again, I don't think that looks wonderful at the moment. We never know what news is looming. I'm not even worried about price levels here. I'm just trying to paint the picture that some really important things do not look all that good. I'm going to talk about this in macro measure, but one other thing is the transports. And come on, they didn't really do too bad, but they're still mired in kind of a mess here with these SMAs. So they're trying to, you can see they're lagging behind the market in some parts of the market by quite a bit. So they're not really firing all that much right now. So these are just big kind of macro signs. Big important sector, which we cover in sector situation. Thinkorswim's fighting with me again. I guess it's running slow for some reason, but semiconductors, of course, and we had this as a name and we couldn't get the breakdown. We had this as a name on Tuesday. We put this out as a trade of the week, and it did reverse, but it didn't. Well, I got the percentages there. I want to switch over on this one. It did reverse for some players in TNT, but we couldn't get the real crack, right? Maybe Ryan and I have done this stuff for so long. I always notice that we tend to be a week early a lot. Like I would say that we see and sense something that's pretty good, and then we're like a week early, and then a lot of times the bigger move will occur this upcoming week. So maybe there's still hope there, maybe one to keep an eye on, but right, that does look vulnerable. That if it cracks below this low, I do think it's definitely starts inviting a trip down. Let's call it to 240, I think, and then you've got this 100 SMA there at 235. That it could work its way down. There's probably a flat line near there too. So bottom line is, like, I think this is on the ropes. The shorties are rolling over here. So that's something to watch almost all the time anyway, from a macro perspective. And if that starts to go, right, that could be in trouble. Now, let's take a look at the dollar. The dollar was trading in a tight range, and that, I think that maybe contributed to the market as well, not doing all that much. There's the dollar. It tried to get through the 20, couldn't do it. By the end of the week, it was back below the 10, and that's where it finished up. And so, does it roll back over, test these recent lows where it double bottomed from potentially, or do they find a way to start cleverly working it back above the 20? And it kind of has this little shelf of a higher low that it can maybe try to build from. I don't know, of course, but to me, like, that's maybe one contribution to the market. Hey, dollar not doing much, market not doing all that much. It did try to move up off the lows a little bit, so there's something there, but we're just at a tough juncture. I don't see a lot of great things you can get reads from, and this is why I've always done these kind of trip around the markets to see what's percolating and what developments, maybe what you can infer from certain things. Here's the Treasury yield, tried to rally, right? Don't know what happens next, of course, but we do think rates are going up. Will this respond, right? Will this yield track accordingly? Right now, they did have a decent turnaround on Friday. It held the 200 there in purple. So maybe it's going to come up, and that's not been good overall for stocks. If that's the case, we'll have to see there. And then finally, I'll take a look at the VIX. And just like I said last week, I think the VIX at these levels, I think if you want to go position yourself for if you're a person who likes to position themselves for owning downside protection, or you think that this whole market's going to roll over, and you want to put on some downside strategies, when it gets this low, you probably should start to nibble a little bit, because there's a lot of volatility that's probably cheaper than it will be, of course, if things already do start to roll over. But this is a good level. I think I started positioning myself a little bit more in a couple of different things. I think I got something. I'm so busy that I think I got something on an IYR. Pretty sure that I did, but I don't mind if it trades up a little bit. I'm planning on I've got some ideas in mind for how I plan to handle this, regardless of what it does. Trading up a little wouldn't bother me at all. But anyway, they held the 20 there on Friday. If it cracks there, I think it's you could pretty much. That means probably we're kind of getting in bigger trouble on this real estate ETF, and people are realizing that might be a rough place. And then you probably do come back down and at least challenge probably the former low. So I would say maybe 80, not a big mover, but I'm trading this very long dated. I'm waiting, going to be patient in there. And then when I think it's time to get more aggressive, I'm going to get very aggressive and add a lot of contracts. But that's kind of that bigger picture look on something. Interestingly, I would just point this one out that's kind of somewhat related, that they managed to look at this action in XHB. So if you're one of those folks, right, you're not that far removed, really, not all that far removed. You certainly weren't on Thursday's high. You were only a few points away from the highest high that this thing's put in. So if you're like, if you're kind of having that, you got to be kidding me reaction, how can housing be up there? I don't know the specifics on this ETF. I don't know the specifics on the companies that are weighted in there in terms of how they're doing, what they're forecasting, but just it sort of strikes me as, wow, I'm really impressed that they've been able to, since October, to get this up to here, hold this up here. just kind of as a layman, because I think between inflation and mortgage rates and then the layoffs and so on and so forth and the kind of run we had, to me it seems I don't know, it just seems out of line to some degree. But I think that's probably a wrap for now. I just wanted to note some of those. So the final thing I think I've got is just the reminder, which is until we get more to work with, I think you just got to stay really nimble. And I mean, I've seen some people get where they would normally get, say, hey, I made 50 or 60% on that little burst during the day because it's the end of the week and you're playing with really cheap options. People are happy to be taking 21% or 32% or something like that, or maybe 15%, because they know that it's just not there. It's the likelihood of you getting anything big. I think you have to just kind of summarize it, you have to be challenging getting a possible breakout to get probably a really big run. And you also have to be probably below this 20 to really crack. So you're kind of a decent amount away. You're probably one solid day away of movement on a 1% in either direction that you'd have to move before maybe things start to pick up in intensity one way or the other. And from day to day, the way the earnings are coming out, you might not even get that. You might not get that ability. You might get the movement, but a lot of it may be achieved through the overnight early morning gaps that they engineer. And that's making it hard to trade right now with the kind of gapping action that we see at times too. So it's wonderful, right, when you're in a bull market and most of the gapping tends to be up, and you can work with that a lot more easily. It makes sense to keep rolling and staying in longer. But with what they've served up for us, it's been really hard. So we kind of talked about mixed bag, and we can argue the pros and cons of the technicals right now. And we did a little bit of that, but there's no point, I think, in going heavy duty on that, knowing that the news, these news events are going to probably trump what the charts tell us for the next couple of weeks, at least until FOMC is in the rear view mirror. And I think that would probably take until the 4th of May. So that's where I'm going to leave things. And I hope that something I've shared with you helps you out this week or at some point in the future. And I just want to thank everyone for tuning in. I'll see you all in the webinars and through the various updates and ideas that we put out. So have a great conclusion to your weekend. Thank you.